What's going on? So today is Tuesday, May 6th. I'm going to do a quick trade review on the 3 trades that I took this morning, how much I won, how much I lost, the thesis behind it, my step-by-step system, and everything in between, right? I ended today on a small green day. It could have been bigger, but my greed got the best of me. I had little key levels that I could have started scaling out of and securing profits, but I wanted to go for the home runs. So I ended with a small green day when those little home runs could have yielded me way more than I ended up with. Sometimes doing a little bit more work instead of doing less work will cost you more. Okay, so that's the lesson I got from today. But before we jump into the video, if you're a struggling trader looking for consistency in the markets, I do offer one-on-one coaching. Go to strongtrading.com, fill out an application, and we'll reach out to you and we'll take it from there. All right, so jumping into the charts today, I traded Qs, right? So the first thing that I normally do is go to the daily time frame, right? I'm a very simple, stupid trader, right? Like I do simple chart patterns, flag patterns, V-shaped reversals, things like that. And when I go to the higher time frame to mark out key levels, I only do previous day lows and highs for profit targets. That's the only reason, right? If it's applicable. Okay. So you can see right now the high, we opened up on a gap down first and foremost, right? So if we were going to be bullish on the day, the previous day low was going to be my profit target to fill that gap, right? And the high, I'm not really going for that, even if it were to do that. Like, that's not really applicable for me. I kind of just want to fill in the gap, and that would have been my profit target. And that's the only reason why I really mark previous day highs and lows, me personally, and also to identify liquidity. Okay. So I'm going to be honest, because I trade simple chart patterns, I really don't have much of a game plan until I see those patterns form, right? Like I wake up every morning. I don't really mark key levels like that. I don't do a whole bunch of extra stuff that probably would help and does help a lot of traders. I just wait for my pattern to show up, and then I take it without hesitation or reservation. See what I did there? Okay, so as market opens, we start going up, right? We start going in an uptrend, and then we have this nice little basing period, right? So granted, this isn't the best quality setup, but it's all probabilities. Manage your risk, take the opportunity. And I did know that if this was to continue to go to the upside, this trade would yield a lot with very little downside. Okay, so I entered on the break of this neckline right here, right? So we came up, came back down, created this little neckline, came down one more time, and then as soon as we pass these highs, actually, let me clear my screen so you can see this from a better perspective. Okay, so this is way better. We came back up, retraced a little bit. The low of this pivot was my stop loss, so I'm going to mark that red. That was my stop loss, right? And we came up, came back down. We created this neckline right here, right? And that's key for me. I need to see a push up, kind of like a double bottom in a sense, right? Like an internal double bottom. That's like really key for me. So we push up, come back down, break this neckline. I enter at the high of the consolidation. I enter right there. So I'm going to get my long position. And I normally do a 2-to-1 from the neckline. So the stop loss is right here. 2-to-1 is about right. Boom. Oh, sorry. Boom, right there. That's a 1-to-2 R. So my stop loss would have been right here. Mark that red. My profit target would have been 1-to-2 R. Simple move. And then my entry would have been at these highs. At these highs right there, that white line. So that was the trade, right? So like I said, this wasn't the highest quality trade. It was a little bit more risky, but I did know that if this was to play out, that even this, we can even pass this 1-to-2 R. So I probably would have scaled out right there and let it run for a little while with some runners, right? So we push up. I'm thinking we're doing pretty good. We pull back a little bit. And once, let me get this out the way. Once I see this pullback, right, like these weak candlesticks going down, I'm over here thinking like, oh, this is beautiful. I probably can add to my position even more when we break that high, right, and stay above it. So we grazed above it a little bit right here, and then we came crashing down, stopped me out immediately. So the moment we got stopped out, I automatically shift my bias. I'm not married to any kind of bias, right? As quick as the market change, so does my mindset, okay? Like I'm reacting to the market. So at this point, I'm like, all right, this was a nice little loss. I lost about $230 on this trade. Cool. Now the market has told me which route is going in or which direction it's going in. So I was on Zoom with Tanner and we trade together every morning. And I told him the next basing candle that we get, I'm entering short immediately. Like my bullish bias is completely dead. And here goes the basing candle right there. That little pink candle right there. So once we broke past that, I entered, marked my stop loss at the high of that basing area. And granted, this is where I fucked up at. This is where the greed comes in at. I always do 1 to 2 R's. So boom, that would have been my stop loss. And then the 2R would have been right here. So this candle right here would have secured my profits. All right. I didn't do it because going back to the daily, which I should have marked out for you guys earlier. Boom. That also could be a profit target as well if we're going short. I'm going to turn that red. If we're going short, I thought we was going to fill this gap right here. So I was going for the gold. Okay. But at the point where we hit my 1 to 2R, I should have scaled out and let runners hit this gap fill if we were able to hit it, right? Which we didn't. Okay. Another thing that I like to point out, I like to use pivot points as my profit target. So let's go to the 15-minute chart. Let's go to the extended hours. Look at this right here. Boom. That's a nice little pivot point we could have used as our profit target. So this candle right here, boom, that could have been a profit target right there as well. And it was equivalent to my 1 to 2R. It's so crazy how different confluences can have the same targets as well. So I would have been able to clear that as well, or at least scale out. All right. So I didn't do that. I ended up getting stopped out. Right here. So these nice little candles right here took me out. Now, at this point, I flip my bias one more time. This was about a $200 loss. So now I'm down almost $500 on the day, which is fine. That's why I do 1 to 2 R's. One winner equals 2 of my losers. So today is either going to be a break even or a small win day if I can get on the right side of the trend. So at this point, I'm looking at what the market is giving me. And I'm like, okay, if I was to go to the upside, what trade would I take? And it will be this one right here. Let me clear my screen. Okay, cool. So if you look at my previous trade recaps, you'll see that I'll go for the same thing. A strong push up or down. A nice little internal double bottom. If it exceeds the high before the double bottom is complete, this trade setup is now void, right? And then I look for the neckline. I look for a strong push up or a close above the neckline. I enter. The bottom of that internal double bottom or top, if we're going to the downside, is my stop loss. And we're doing a 1 to 2R from there, or previous day high or low, depending on what direction we're going in, whatever market structure or the market grants me. Okay, so that's what I'm looking for. Or another A+ setup for me is a strong push up or down. We get a nice little pullback. We exceed the highs, retest, right, that high. And I'm going to put a box right there because it's a range. It's normally not just going to touch the top of that high and then reverse, right? So it can touch anywhere here as long as we do not go below that pivot right there, or that swing low, whatever you want to call it. That's the stop loss. So it can do whatever it wants as long as it doesn't hit that stop loss. So we need a reaction right here. And then I need to find a neckline on this nice little swing high. And then once we get above that neckline with either volume or strong close, I'm going to enter, and we're doing a 1 to 2R. Or previous day high or low, depending on what direction we're going in, whatever the market grants me. Okay, so I'm looking up at the upside bias now that I got stopped out on my second trade, and I'm like, okay, where would I have gotten in at? I would have got in right here. Strong push up, boom, exceeded the high. All right, let me draw that box so you can see. So it needs to retest, long as it does not go below that low right here. So long as it doesn't go below this candle right here, that's the low, that's the stop loss. We close strong above it or get some nice little volume. We enter, stop loss right here, and then we're going for previous day high or low which you can see, boom, we hit, okay? Or 1 and 2R and scale out from there. So I would have entered right here. Boom, stop loss right there. 2R multiple, boom. We would have scaled out right here and let the runners run, and that would have been a nice win, which I did not do. Now, I didn't jump right in because I got stopped out right here. I wasn't going to enter right here. This was a bad position to be in because my stop loss would have been down here. The space, let me change the color of this. The risk, right, is the space between your entry and your stop loss. Look at all this risk. That's a lot of risk, right? Compared to if I would have entered right here, my risk would have been right here. Just this, right? That's twice the amount of risk. I'm not going to take that. So I need to wait for a pullback. Let me clear my screen. All right, cool. So got stopped out right here. Price action is up here. I can't enter because this would have been my stop loss, because this would have been the trade setup that I would have taken. And this is too much risk. I can't do that. So now I need to wait for a pullback, see if price action will come back here. Let me change that color. Let's do orange. So I need price to come back to this orange line at least. It never does. Okay. So in this situation, you need to be okay with missing a move and calling it a small red day if it does not pull back. So what I did is I waited, and you can see this is a nice little pullback right here. But I want to go to the 2-minute chart because I need a little bit more validity. So boom, this is what I needed. On the 2-minute chart, there hasn't been a pullback yet. So this has granted me an opportunity. Look at this. Boom, nice little neckline right there. So I set my stop loss at the bottom of this candle. I entered right above this candle right here. Okay, so I entered around right there. So I went on the higher time frame to see where we could have hit. Right, I'm looking for pivot points. Boom, one right here. I'm gonna change that to green. So that's a potential profit target. Boom, another potential profit target, or the gap fill, or the high of the London session. So we have about 4 potential profit targets that we can hit, or key levels that we can continuously scale out of if you want to let it ride. But at this point, I'm at my 3rd trade. My mental capital is drawing down, right? Like I don't have much patience anymore. I only have a few more good decisions that I can make. There's probably some liquidity area at some of these zones, and I don't have no patience for a pullback. So I allowed this right here. I'm gonna delete the rest. I allowed the closest profit target to take me out, which is right there. Okay. So as you can see, we got a strong push up, hit my profit target, and that was a $800 move, leaving me with a small $300 win on the day. So that's my trade recap. I hope that gave you great insight on how I trade, or if it can help you with your trading, right? Like my trading is very simple. I'm not marrying a bias here. As the market is taking out my stop losses, I understand because I'm a naked price action trader, my stop losses are based on market structure and pivot points. So if those get broken, not only is my stop loss my insurance, it is also my signal for the market letting me know that there's a strong possibility of reversal or a sweep. So I have to keep my eyes open and be patient before I enter my next trade. So I hope that this helped you. And like I said, if you're a struggling trader with a system, but your bottom line is not reflecting, but you know that you have a profitable system, go to strongtrading.com, apply there. We'll reach out to you and we'll take it from there. I'll see you tomorrow.